Portfolio Builder members, our Monday trade alert has a maximum profit currently about $200 per contract. So good job for those of you following that. Our profits are up substantially in this spreadsheet, tracking our results, and you can see we sold the 277 covered call, so we're now $3 above that. We had about 65 cents in profit because we wrote this covered call when the SPY was trading at 276.34, and if we are assigned, which probably we will be, we'll get to keep the $1.44 credit plus about 70 cents of profit between where we sold the covered call and where we agreed to sell our shares at the 277 strike. So we missed out on about $1.50 of the run up today, but we had protection to that critical level at 275, where we saw Wall Street had about $1 billion worth of buy orders sitting there to protect the SPY. Our Diamond membership has jumped up in value today, as we suspected it would. Our trade alert today was to cover the covered calls, which had protected us for much of the downturn in the recent 4 weeks. And today we told you to hold on to your shares with no covered calls. So that sure paid off well. And we'll take a look at the charts of our underlying assets in this portfolio in a minute. And the profits sitting in our whale club remain right around that 7.6 because we're almost completely in cash. We are playing the bond market with tiny option positions currently and waiting for the opportunity to buy Amazon and Google at a discount. And so what I'm going to do is just go backwards through all the screenshots I've recorded for the basic program over the past approximately 24 hours. The big news today was that China softened its tone on the trade war, saying that we needed to go back to talking and so-called meeting in the middle. There was a pleasant interaction over in the UK with Trump and May. And plus we had Jerome Powell, the U.S. Fed chairman, come out with relatively dovish comments today about potentially maybe lowering the rates if inflation remained low and the trade war started to impact the global growth picture, which it is. So we're back to bad news is good news for the market. Now we were watching the emerging markets bounce on Monday when the U.S. market was still having trouble, and that's why I thought that we did have a swing coming up. We also saw the option market hanging in even when they were underwater on the put option writing on the SPY. They kept that 275 loaded, and so we were pretty confident with the trade from Monday to take a little extra risk. We were still protected to 275. Now we're seeing a little sell-off in the Shanghai, not a big one, but of course that is alarming. So my best bet for everybody out there is that this will be a short-lived rally, and without some major concessions and peaceful talks in the trade war, I would suspect it won't be long until we have another surprise Trump tweet. So we're playing this as a short-term rally, and then we'll get back to very defensive until the major risks in the market are alleviated. But here's some of the trade war stocks flying up. The best one is AMD, 7% up today. Micron, 5%. So a lot of the chip companies, and even Apple rebounding today after having to live through a big sell-off. Tesla getting a little breather, but not in the big picture. Nowhere near its all-time highs back in 2017. And again, we look at these for just a feeling of the market. We're just trying to play it safe on the SPY and watch out for any major earthquakes. And if we can do that, we can print money selling call options to speculators Monday, Wednesday, Friday. Beyond Meat, hanging in there with one of the only IPOs up this year. But we did see a little bit of a bounce in Uber and Lyft, not just totally losing all of its IPO price. Emerging markets slowing down. Remember on Monday, we saw the big gains on the emerging markets ahead of the U.S. recovery today. The TECS ETF, which we like to use as what I call the machine gun strategy for playing the downside, compared to put options, out-of-the-money put options like a sniper. So we've been out of TECS for some time, but for those of you who did catch the move on that longer than we did, good job. I would suspect we will be buying this back up after it feels like the market has gotten over-purchased. Here's a one-year look at the SPY ETF. Basically just bouncing in between this range, going nowhere, which is one reason people really like our strategy. We do great when the market goes nowhere. Here's that 1 month view of the SPY. Got pretty scary there, and then this miracle rebound today. Gold sees biggest inflow since Brexit as investor exodus contagion spreads to credit. Fed claritas to use appropriate policy if growth is slower than expected, underlying inflation is lower. And so that is currently exactly what's going on. However, if the tariffs were to create inflation, that could put the Fed in an awkward spot here. Some news on Huawei. Some of the U.S.'s closest allies, like the UK and Germany, have rejected pressure to end cooperation with Huawei, citing a lack of evidence. Germany said that in March, they would not prevent Huawei from bidding on contracts. U.S. continues to warn that Huawei could easily build backdoors if they haven't already into their hardware, while Huawei is saying that they will be happy to sign no spy agreements. So Huawei continues to make no acknowledgments of ever stealing anything, and that they are a little angel. Pompeo, quote, Western countries, liberal democracies, share a common value set. The Chinese don't share that value set. And that just goes to really underpin the drama that's going to unfold between these two powers that are now clashing. Would take persistent inversion of yield curve seriously, but not currently a strong signal of concern. Fed's Clarita. Here's an excerpt out of a Nomura. It's a Japanese bank that really focuses on technical flows, CTAs, things of that nature, and sees the possibility of a, quote, vicious bear squeeze rally in U.S. stocks from mid-June through early August, which could potentially cause a massive sell-off by mid-August or September. One of the Chinese spokespeople's Twitter accounts, China softening the stance. This is a useless speculation. Beijing is willing to negotiate, but now is very much convinced fair talks are impossible without a thorough fight. The Chinese realized they were a bit naive before, believing trade talks can yield good results. China Commerce Ministry says the differences and frictions between China and the U.S. should be resolved through dialogue and negotiations. And when a deal is imminent, renege on all agreements. And of course, that's a joke from Zero Hedge, but that's what happened for the last 2 years. This guy's comical. Investors panic buy the overvalued, money-losing tech stocks they sold 5% lower yesterday. Stocks spike as China says differences with U.S. should be resolved through dialogue. China's top economic planner in DRC said China will step up controls on rare earths exports to better use the strategic resource. Build a mechanism to track and review the entire process of rare earth exports, crack down on illegal production and smuggling. So this is a market China has a monopoly on currently. U.S. factory orders slowest growth since Trump elected. Of course, this makes sense with the trade war uncertainties. Powell says dot plot of Fed rate forecast has distracted attention from how Fed will react to unexpected events. And his main message today is that they are ready to lower rates if they need to. And this is one of the key reasons for today's big bounce in stocks. China Commerce Ministry. China hopes U.S. to stop wrongdoing. Meet China halfway. Common to make revisions, suggestions, and adjustments during trade negotiations. Fed Evans. Policymakers should be overshooting 2% inflation to be symmetric. Can look through tariff-driven increases. So basically, they're just saying they won't raise rates on us without a lot of notice here, which is good. Drunken Miller predicts hedge fund carnage. There's probably 5 to 10 people, women and men, who are worth more than their fees now. There are still going to be superstars, but we need to get back to 200 or 300 from 4,000 funds. He also announced he sold all his stocks and is 100% into, I think, 10-year treasuries. So he's betting on the Fed going down to zero and pushing these treasury yields even lower. CTAs are now shorting the Russell, and it's only a matter of time before they turn short on the S&P 500. This was from Nomura, the Japanese trading firm. Australia cuts rates for the first time in 3 years to 1.25%, the lowest on record. Fed Evans. Current setting on rate has been appropriate, but if there is more softening, policymakers need to ask if they are getting in the way of the economy. The market sees something I have not yet seen in the data. And he's referring to the bond market pricing in rate cuts, 3 rate cuts in the next year. And the response to the May sell-off has been going into defensive plays and going into cash and exiting all the risky equities, which is why we got such a violent sell-off there. The winner of the U.S.-China trade war is clearly ... Vietnam. So we can see all the trade routes are being rerouted to reduce the tariff costs, and currently Vietnam is the biggest benefactor. Drunken Miller dumps all his stocks, piles into treasuries, expecting rates to hit zero. Remember, he's been making this call since December on Bloomberg. So far, he is killing it on that. Okay, now we're taking a look at our diamond portfolio, the stocks held in it. In this video, you won't know what our exact trade alerts are. That's only for our paid members, but you'll see what's going on in general. And if you are a member, you'll know the general health of each position we're in. Stocks turned in best one-day performance since January. And so our entire portfolio jumped up in value today, and we have this entire week actually with no covered calls. We're just letting the equity generate the return, and I do suspect we will quickly be back to a defensive posture. Here's Wells Fargo jumping today, as you can see. Microsoft going from 40 to 130 in just the last 4 years. You can see the big pop today on that one. Facebook having a good pop today, not quite as big as some of the others. Cisco having a big pop. Comcast. Bank of America. Apple. And again, Apple is the single stock we are hedging with put options right now. And that protects our entire portfolio, as I do believe this would be the single stock China would attack with most of its effort to really retaliate against our attack on their telecommunication company, Huawei. Although Huawei is really like a combination of all of these tech stocks combined, minus the banks. And now that Google has kicked them out of the Android operating system, they'll have to start developing their own operating system like Microsoft has Windows. But all around, big gains in this portfolio. It's great that we covered the positions and let the equities ride today, and we will continue to let that flow until Tuesday. If there's any emergency alert, we will write a covered call, deepen the money, and protect. But I think this may be one of our best weeks to date after this week is complete. Now, in the Whale Club, we have 2 major plays we're trying to get into. Number one, we're trying to catch a snap in treasury rates with higher yields. And we may also try to play another push on the a final last hurrah on the bond market. I think if the trade war continues to escalate, I think we'll see that we do get another push into the safe haven and maybe another big run up on the TLT. Now, if things go good with the trade war, then I would expect the yields to rise alongside stocks. So the TLT would pull back and SPY would jump up. So we don't want to put a lot of money in either direction right now. It's a risky market for sure to be buying bonds when the yield is less than the target inflation. So that's crazy. You're trying to make absolutely no profit with the current yield on the treasuries. But oil did have a little bit of a bounce today. Gold is getting right to that resistance level. And so unless the trade war really escalates, probably we'll have a hard time getting past that 5-year high. Lumber had a big spike today as well, but you can see it's still down considerably. Here's that jump today. Summary of the commodities markets. Here's the 30-year treasury. A little uptick today, but again, if the Fed does start lowering rates, the trade war escalates, tariffs start popping up around the world, growth slows, we get another big rush into treasuries. It's possible, and it looks like the way for a quick buck, if you want to be a speculator, which of course a lot of people do love to do that. Same thing, same shape in the 10-year today. Here's an article about the Fed today. The Fed admits failure given the spring ends June 20th. I still think a final capitulation decline in the S&P 500 is likely. Lumber continues to behave weak. Lumber is having a hard time finding a base. The question is whether the market correction or bear market is upon us. And here's a look at the TLT chart over the last 1 month. And a summary of the stocks we're following in the Whale Club. So we got out of the TLT right around here at the 126 level. After it jumped to 128, we sold a deep in the money one. Made like 22 cents, watched it climb another $4. We missed out on all of that. We've been in cash. And we're starting to build a short position on the TLT that has at least a year of time premium. So this is something that will most likely happen very unexpectedly. And our trade Thursday will be probably a shorter duration and play the upside of the TLT. So I think we have the potential, if trade wars do escalate, to capture some pretty big gains on the TLT to the upside. But we also want to be playing the downside risk that yields spike, and that could happen for a number of reasons. So that's a wrap for today's update. All of our portfolios are sitting very pretty. Call Dean to save on your membership, whether you're in an active trial and you're getting the trade alerts, or you're in an expired trial and you're now getting the trade alerts after the market close, which means you can see they're working but you can't follow them. Call Dean. We'll get you activated. We'll upgrade you. The second you do upgrade, you get a free bonus for 30 days. You also get our Tuesday trade alert, which is for the diamond level members. And you'll get our Thursday trade alert, which is for our Whale Club. So Tuesday, we're playing that Microsoft Apple stock portfolio with typically covered calls, although this week we're letting them just jump up in value all on their own. And in the Thursday club, we mostly play the bond market. That's where we'll take those TLT trades and eventually rotate into buying Google and Amazon when they've had a serious sell-off. So call Dean, 505-322-7515. Tomorrow we have a new basic member trade alert at noon Eastern. So thanks again for your time, and keep a lookout for our update tomorrow.